A question that came up recently had to do with banking, more specifically with borrowing. If you're thinking about borrowing money, there are two key terms you have to understand. One of those is a personal guarantee. The other is collateral. These are very, very different terms that the banks use when they lend you money. So remember, banks are in the business to lend money and get repaid. That's how they make their money based on the interest of that. So if the bank wants to lend you money and they want a personal guarantee, what that means is everything that you own is now going to be used to pay back the bank if you don't pay them. Everything. That's a personal guarantee, everything that you own. Collateral, on the other hand, means you take one specific asset. Maybe it's a rental property that you have, and maybe you use that as collateral to borrow the money. So let's say that you borrow $500,000 to do something, and the bank asks you for a personal guarantee and collateral. If you provide collateral of that same amount, and they're pretty darn sure they're going to get paid one way or the other, they might not care about a personal guarantee. But if you don't have a piece of collateral that you can put up like that, then they will want that personal guarantee pretty much on everything and anything that you want to borrow from them. So again, going back to that example of a rental property as collateral, they might put a lien on that property. But what does that mean? What that means is there is now a public notice that on that piece of real estate that the bank is owed first. And that means if you try to get credit with anybody else, to borrow money from somebody else, they will see that that house is already pledged as collateral. And so they cannot get it because it already belongs to the bank if you don't pay the bank. You might also hear about what's called a UCC filing. A UCC filing is very, very similar. It notifies people who might want to lend you money that you have already pledged assets and that you cannot really give up those other assets to somebody else because the UCC filing is going to be in a first priority position. So again, banks want to get paid. And one thing that's important too, when you go to borrow money, remember that your credit report is what tells the bank about you. So if you have not looked at your credit report lately, get that free credit report. There are three places you can get it for free, but get your credit report, take a look at it, especially if you're thinking about borrowing some money, take a look at it first so that you know what the bank is going to see before they actually see it. That way you're prepared to talk about that. And that credit report, you'll hear about also a credit score. The credit score is your strength as a borrower, your ability to repay the bank or anybody else. That's what that credit score is. And a lower credit score means you will pay a higher rate of interest. A higher credit score means you are a better quality borrower and you will get the bank's best terms. That's on points, that's on the interest rate, that's on fees, because you walk in with a much stronger position when you have a higher credit score going into a situation where you're going to borrow money. I hope this helps.